Welcome back, on-chain trenchers, to the second part of the ownership coins, unruggable ICOs, MetaDAO, and Futarchy explained episode. In the first part, we took a deep dive into ownership coins, explained how unruggable ICOs function on MetaDAO, and explained the concept behind market-driven governance, also known as Futarchy. And today I would like to guide you through the META token, the native coin of MetaDAO. And before we dive in, here's a quick overview of the key topics that we're gonna discuss in this video. So first off, who are the investors of MetaDAO and how many funds were they able to raise throughout their lifetime? Then we will take a look at their tokenomics and whether the META token is a worthwhile investment, especially looking at the protocol revenue mechanisms, basically stating how the protocol is able to generate revenue for its token holders, before we then take a look at the META Flywheel, which is very, very intriguing, I promise you that. And finally, I will conclude the presentation with a future outlook and my personal takes, whether it makes sense to buy META tokens right now or not. Cool, so let's directly jump in. So first of all, for everybody that hasn't seen the first part, I highly recommend checking it out, but if you're too lazy for that, it's fine. Here's a quick recap. So MetaDAO is a launchpad for ownership coins, also known as unruggable ICO platform. So founders from all over the world can raise money on MetaDAO, which is basically unruggable. So it gives investors a solid protection from so-called 𝗬𝗶𝗺𝗃 founders that raise money but never deliver and just run away with the money. This is not possible on MetaDAO. And furthermore, the third crucial point of MetaDAO, that they implemented the first version of Futarchy, aka market-based governance, in production. If you want to learn more, please check out the previous video that you can find in the show notes below. So here are some quick stats of MetaDAO. As I said, it's a launchpad for ownership coins, and in total, 7 protocols already launched their tokens on MetaDAO, and cumulatively, they raised a little bit more than $17 million, and right now the combined market cap of all these tokens is 90 million. So that's a little bit more than a 4x on average. If you had invested in all of those, you would sit on more than 4x of your initial investment. Of course, some tokens did better, others did worse, and one token, as we see here, no longer exists, as the project didn't pan out as planned. Therefore, the community claimed back the money that they initially put in, so the token was erased and investors got back their money, which is pretty neat if you ask me, and totally impossible with other launchpads these days. So here we see some ownership coins like 𝗬𝗂𝗹𝗵 or 𝗬𝗨. And as we've said, ownership coins always give you the right to claw back your initial investment of the majority of token holders wants to do that. So the investors cannot run away with the treasury, since the treasury sits in this smart contract, and therefore the token price should never really drop below the treasury. As we see here, these folks raised 2.5 million and they raised a little bit less than 1 million. And the current token price is just slightly below the initial raise, but it's literally impossible to drop minus 50%. I mean, it's possible, but the moment it drops below 50%, then the community can just claim back the treasury and ARB out this difference. And so, yeah, it's pretty hard to get rugged if you invest in ownership coins. And here you see 𝗬𝗨 that raised a total of 3.5 million. And has a current market cap, I guess, around 50 million. So investors are already up more than 12x on that coin. And yeah, all the coins that are launched on MetaDAO are automatically integrated with Jupiter, and everybody can trade and access them there. A quick word about the founders. It's Profit and Analog. So both of them are Futarchy obsessed and pioneers and very, very passionate founders. Both are longtime crypto OGs, and they basically took the decision to bring Futarchy alive and turn this vague concept of Futarchy into a live and running product. And here some words from Daniel Barabender, a investor from the Variant Fund that just recently invested 2.5 million into MetaDAO, and he said about Profit that he got to know him more and more over the years, and he's been consistently blown away by 2 of his personal qualities. which first is his unbendable belief in what he's building and why it matters to the world, and second, he is highly adaptable and always willing to change his mind if new facts pop up, which are two very crucial properties a founder should have. Talking about investors, let's briefly look at everybody that holds a stake in this project. So at the very beginnings in February 2024, just to bootstrap the entire undertaking, they raised $75,000 from the community at a price of like 0.024 cents, and like those few investors that had the guts to invest in this crazy idea are now sitting on a 250x. Then, just 1 month later, 𝗬𝗂'𝗹𝗹, a Solana accelerator and hackathon organizer, invested $250K as a seed investment into MetaDAO at a price of 85 cents, and they're currently sitting on a 8x of their investment. And they are saying that MetaDAO is one of the most promising early experiments in crypto. 4 months later, the project raised its first proper round, a little bit more than 2 million, from various angels that invested roughly 500K, and Paradigm, one of the biggest VCs in our industry, that invested 1.7 million at a price of 55 cents, and they're currently sitting on a 12x return. Then, earlier this year, Thea Investment, a fully liquid fund, invested twice into MetaDAO. The first round in January, where they invested 500K at a token price of 1.75, which is currently sitting at a 5x return. And a few months later, they doubled down on their investment thesis of ownership coins and Futarchy, where they invested additionally 630K at a price of 90 cents. So you see here, the price of Meta tanked, but nonetheless they bought more. And what is interesting here, the liquidity was very shallow, so they agreed on at a OTC deal with the community where they bought the token at a 36% premium. I mean, I've never seen that before, that VCs invest into a token at a premium. Usually, they get some lockups and some discount, but here they literally invested at a 36% premium. And the final raise of 10 million just happened a few weeks ago, where 4 different players, 1 angel investor, Andrew from Coinbase, and 3 major VCs, 𝗧𝗶𝗺𝗀𝗀, Variant, and Paradigm, again doubling down on MetaDAO, collectively invested 10 million, and here we see their entry prices. Just to remember, currently MetaDAO is trading below $7, so you see here Paradigm invested at $7.83, Variant invested at $8.60, and here this angel got in for $6.23 and 𝗧𝗶𝗺𝗀𝗀 for $6.23. So another time where you as a retail investor can currently pick up the Meta token below the price that venture investors paid for, which is pretty cool. And I mean, these guys, they definitely did their due diligence and know what they're investing in. But as usually, there's always some risk involved with these early stage investments. So to sum it up, the team raised a total of 13.5 million, which is not a lot if you compare it to other bigger projects out there that raised, like Pump Fund, more than $1 billion. And here all the tokens are fully unlocked and 100% circulating. And still the treasury holds around $11.8 million, which is like governed by Futarchy, so the team cannot run away with it. And the only funds that the team has access to is 120K, which is their monthly burn rate, which gets automatically sent to the team at the beginning of every month. And here a quote from Prophet, the co-founder, which says that now we finally have the war chest to compete in this highly competitive Launchpad market. We are still underdogs with like 11.8 millions compared to competitors that have billions in their treasury, but it gives us a fighting chance. And yeah, sometimes it just pays off to bet on the underdog, I guess. Sweet. Now that we know everything about the investors and their runway, let's have a closer look at their tokenomics. So here is a screenshot that I took just seconds before I clicked on the record button, and we see MetaDAO trades below $7. It has a FTV of 150, and like market cap and FTV are the same, 100% circulating, and the total supply is similar to the Bitcoin supply, which is 22 million. Cool, so now let me take you through the Genesis airdrop or the META token generation event. So back in the days, only 10,000 META were airdropped to early supporters, which are so-called cyber capitalists and techno analysts. Don't ask me what this exactly means, but those were basically early believers in Futarchy, and all these folks received the initial airdrop, which was 1% of the total supply, and 99%, like 990K, was airdropped to the DAO treasury. So only 1% of the entire token supply was circulating at day one, and it was airdropped to those early believers, so-called futards. And it was not a widely distributed airdrop, but it was only dropped to 86 futards, and you either had to be contributing to the MetaDAO codebase very early on or be part of their Discord at Genesis. And another cool feature is that none of the airdrop was allocated to the team and none was allocated to the foundation. By the way, a foundation of MetaDAO doesn't exist. It's fully owned by the token holders. And one point which is very important to highlight is that 99.3% of the entire supply that was airdropped to the treasury was burned in a second step, as holders had concerns about this big token overhang just sitting there in the treasury. A few months passed and the META token just rose in value and climbed to around $800, but the issue was that there were only 20K tokens since the treasury was burned. Therefore, the community voted for a proposal to do a 1 to 1,000 token split. So basically everybody that held one META token got airdropped 999 additional META token. So the entire supply 1000x'd overnight, and yeah, the supply rose from 20K to 20 million, and of course the price dropped from $800 to 80 cents. And another cool feature that was implemented via this proposal was the reintroduction of mint authority, which allows the protocol to mint new tokens only in the case it gets approved by Futarchy. So all the token holders and external folks agree that issuing new tokens would increase the value of META. So this is pretty handy because we know these days there are these weird tokenomics charts where 25% is allocated for future airdrops, 12% is allocated for ecosystem rewards, and then there's another bucket, nobody really knows what's going on, but yeah, in the end it ends up at the team's coffers. So this is not possible with MetaDAO because new tokens can only be minted if approved by governments. Let me take you step by step through the evolution of the token. So initially here, 10K airdrop to early supporters and 990K airdrop to the treasury. In total, we had a max supply of 1 million. 1% airdropped, 99% in the treasury. Then the current proposal came up where 99.3% of the treasury was burned, so leaving 11K META back in the treasury. So we had a total supply a little bit south of 21 million META, as we see here. Then the proposal to do a 1 to 100 token split was approved, and that's how we ended up with the new max supply. But as this cool feature to mint additional tokens was introduced, another proposal was raised and the community was asked, what do you think if we raise $10 million and therefore we have to issue some new tokens, but this only goes through if the majority of token holders think that issuing 1 million additional META tokens will increase the price of META, and that's exactly what the community thought will happen, and therefore new tokens were issued and $10 million were raised to the treasury to compete with other folks in the Launchpad Wars. So if you want to learn more about the META token, I highly recommend you checking out the Token Transparency Framework report from Blockworks, which gave the token an outstanding rating of 40 out of 40 maximum points. So there are only, I guess, 3 tokens that achieved this score. So Blockworks put their stamp on the META token and confirming that this is a very legitimate token which cannot be rugged. It accrues good value. It shares all the revenue with token holders rather than equity holders. All the team allocations are disclosed, advisories are disclosed, so on and so forth. And that's exactly what I personally want to see if I hold a token, that the team is not trying to cheat on me, but instead creating sustainable value for the protocol and for token holders like myself. And the final point about the token, which is probably a drawback for now but could lead to explosive growth and price movement going further, is that the META token is currently only available on-chain on the Solana blockchain. It's not listed on any CEX, as you can see here. Therefore, the volume is rather low compared to its market cap, and big buys or sells can move the price considerably. Hence, META is a very volatile token. But again, here quoting Prophet, he said that they are working or thinking about CEX listings of the META token and all the ownership tokens that are being launched on META, so that, yeah, they are also being listed on CEXs, and they're currently in conversations with market makers to facilitate this future step. Now it's getting interesting. Let's talk revenue mechanisms and how the protocol is generating or accruing value for us as a token holder. So there are three major revenue mechanisms. One is the Futarchy AMM fees, second Meteora LP fees, and third Launchpad fees. And now let's take them apart one by one. All right, number one, Futarchy AMM fees. Think of it as a in-house built AMM similar to proprietary AMMs, but built for Futarchy. So only tokens launched on MetaDAO have access to it. And the main purpose of it is to bootstrap initial liquidity. So if founders raise initial money, then a small percentage, like 20% of the initial USDC that they raise, gets paired with some tokens to provide initial liquidity. And then whenever a Futarchy proposal goes live, two prediction markets are spun up, and then 50% of this initial liquidity gets temporarily sent over to the prediction markets, where you ask, will the price of token A go up or down if this proposal goes through or not? And of course people trade there, so this generates a lot of trading activity, and that's where MetaDAO earns fees, which are currently 0.25% on every trade. It doesn't matter if it's just the spot market or the prediction market. And another 0.25% goes to the native token like 𝗬𝗎 or all the other ownership tokens. But Prophet said that soon 0.5% of the entire fees will go directly to the Meta treasury, as he has talked to the founders of ownership coins, and they said they don't rely on this revenue, since the reason they are launching their coins on MetaDAO is to raise initial capital to bootstrap their operation, so they don't need these fees, so they rather give it back to META token holders. And if we look more closely here at the chart, this first revenue mechanism generates approximately $10,000 a day or 70K a week. And these daily numbers of 10K revenue are generated by 6 tokens only. So just imagine if the number of tokens traded on the Futarchy AMM goes 2x, 3x, 4x, 10x, and 50 more projects launch over the upcoming weeks and months. This should just skyrocket those revenue numbers here. And then the second revenue generating mechanisms are Meteora LP fees. So next to the Futarchy AMM, a second liquidity pool is spun up, but this time on Meteora, one of the largest AMM dexes on Solana. And Meteora is only used for single-sided liquidity provision above the ICO price, which should help to dampen the volatility after a coin launches on MetaDAO. And yeah, this just brings in additional 10K in daily volume, so we are already at 20K daily volume if we add these two revenue mechanisms together, as you can see here in this chart. And the third revenue bucket are Launchpad fee. As of now, token launches on MetaDAO don't cost anything, so they are fully free. But soon, as we see here through this conversation, the team might implement some Launchpad fees. Cool, so here we are at my favorite slide, the MetaDAO Flywheel. I'm especially proud of this one, since I basically came up with it. And here's how the MetaDAO Flywheel works. So first off, founders launch ownership coins on MetaDAO. And as we just seen looking at the charts, the more ownership coins are launched through MetaDAO, the more revenue is generated by the protocol, which fills up its treasury and in the future can be used to buy back tokens or just being distributed to token holders, which should lead to an increase of the meta price. And as we all know, we have seen it with Zcash, we've seen it with OR in the past. The moment the price goes up, that draws in a lot of new attention to the protocol. People come to your website, they check out your application, and yeah, they're just genuinely curious about what's going on. And as the meta token price goes up, people then will naturally learn about unruggable ICOs and ownership coins. And the moment they understand that ICOs can be fair, you're not at the whim of the founder rugging you, and you as a token holder get real ownership and revenue participation in the coin. And every rational investor with some common sense will prefer ownership tokens over standard tokens and therefore demand more ownership coins. And this will just naturally attract more founders to MetaDAO and to launch their token as a ownership coin on MetaDAO, which brings us back and closes the loop. More coins are being launched on MetaDAO, more protocol revenue is generated, the price goes up, more people demand ownership coins, and this entire flywheel is just taking off. So talking about upcoming projects launching on MetaDAO, how does the project pipeline look? So again, quoting Prophet, the co-founder, he said that there are 100 plus projects that are interested and that have reached out to the team to launch their tokens as ownership coins on MetaDAO. And like currently they're just flooded by inbound messages and they're trying to upscale their internal operations to just cater to all of these founders. And therefore he said it will be key to make token launches on MetaDAO permissionless so that they no longer have to vet and approve every single project that is willing to launch their tokens there. And this will just lead to an explosion of token launches on MetaDAO. Of course, this also bears some risk as there is less vetting being done by the team, but it allows just the platform to scale super fast and make unruggable ICOs accessible to everyone. And one super promising launch, I haven't done a deep dive into this project, but Solomon will raise pretty soon on November 13th. So by the time you will watch this video, this token raise will already be live, and I guess it will last for 4 days. So until November 18th, you can contribute or participate in this token launch as they are raising or they are seeking 2 million in investment. And think of Solomon as the Ethena for Solana. So they are offering a yield-bearing stablecoin, and they are generating this yield by using a delta neutral strategy where they are holding assets on spot and shorting it on burps. And by doing this, they will capture the funding rates, which can vary between 10 and 25% a year. And so this has been vetted by the MetaDAO team, and the protocol has been live for more than 1 year. They have a TVL of 1.5 million, and it has withstood major downturns and market crashes in the past. So if you want to invest, please do your own research, do your own due diligence, but this is the next token launch coming up pretty soon on MetaDAO. And Prophet, like in his word, he said that Solomon could have easily raised money from VCs, but they picked ownership coins instead for the potential distribution effects and the benefits of involving a community early on and giving them access basically at the seed round of your project. But of course, there is a ton of competition out there, especially in the Launchpad arena. It's a highly competitive market with big players like Jupiter, Coinbase, and BankFun competing, and they all have big upcoming token launches like the WET token launch on Jupiter, which is the token of 𝗬𝗪𝘁, one of the largest proprietary AMMs on Solana. Then Coinbase just recently acquired Echoes and is now getting fully involved into the Launchpad Wars. And as you might know, Monad will do their public sale on Coinbase. And of course, 𝗵𝗁 with their in-house built Spotlight platform, which caters more towards retail investors and not necessarily trenchers or degens, or Dev Fund, which is an external team not affiliated with the 𝗵𝗁 team, but is leveraging the 𝗵𝗁 platform to create their own Launchpad. And then we have some smaller players like Metaplex or Believe. So while we can't say for sure who's gonna win or emerge as a winner out of these Launchpad Wars, one thing is for sure, that the big winner is internet capital markets investors, but more so founders that can now raise money almost instantly across the globe and fund their novel ideas. And as you might have noticed, all of these projects here are based on Solana, except Coinbase, which is like a centralized exchange. So another winner, I think, is Solana, since all the coins that are being launched through these launchpads will be Solana native tokens. And talking about Solana and internet capital markets, I wanted to share with you this quote of Mike Dudas, where he states that a lot of the most interesting token models are happening on Solana right now, like 𝗵𝗁 or Meta cards, with lots more in the hopper. So yeah, if you are interested in internet capital markets, or if you are fighting in the trenches, Solana is definitely the place to be. Now you might ask, 𝗬𝗵, is it a good time to invest in MetaDAO? Of course, I cannot answer you this question. I can just share with you my thoughts, and then you have to come up with your own answer. But just looking at these facts, that a few weeks ago, 3 major VCs invested $10 million into MetaDAO at a price of $7.83, $8.6, and $7.35. So here I made some red crosses on the chart to make you understand at which price points those folks invested. I mean, all the way down here, it was just pure gambling. Of course, there was this big run, but this is like the first moment that MetaDAO had product market fit, and now they received 10 millions to really accelerate and like make the next move up. And as I said before, these folks invested at higher prices that you can currently invest. The price is below $7 and the market cap is only 150 million. Fully diluted, fully circulating. So of course, super low market cap, highly risky, but yeah, if you like the concept of ownership coins, unruggable ICOs, then yeah, buying some Meta might be a worthwhile endeavor. But of course, never invest into a coin without looking at the underlying stats. And I personally like to invest into coins that generate real revenue, because in the end, if you don't generate revenue and buy back your own token or show to investor that there is some product market fit, all the tokens will eventually bleed towards zero, because if there is no like money coming in and only money going out, then eventually the business will die, just like businesses in the real world die if they don't generate positive cash flows. So here again, let's recap. 150K weekly revenue. If we annualize that, it will be somewhere in the area of 8 million, and this gives us a revenue multiplier of 19x. Like, these numbers here are before the team will most likely increase the fees from 0.05 to 0.5, so this should like boost the revenues even further. And this chart here also doesn't include potential future launchpad fees. And a 19x revenue multiple, is this expensive? Is this cheap? So it depends. If you compare it to other DeFi tokens that are heavy revenue generators like 𝗵𝗁 or Hype, you see that Meta is somewhere in between here, where 𝗵 trades at a 8x of their revenue and Hype at a 36x. But the thing with 𝗵, Hype, 𝗟𝗏, 𝗪, and all these coins is that not all the tokens are circulating, and there will be massive unlocks in the future. And it's just, you know, a little bit more uncertain, and those protocols have already grown a lot. Of course, they can grow much further. But yeah, with Meta, I think the majority of their growth, should they succeed, is still in front of them. Remember, only 6 tokens are currently live on MetaDAO. Just imagine what the revenue could like if there are 10, 20, 50, 100 ownership coins live on MetaDAO. And if you compare it to Web 2 or the Magnificent 7, Here I pulled some price to earnings ratios. I mean, it's not super fair to compare revenue to earnings, but as we've seen with 𝗵𝗁 or Hyperliquid, they're basically using 100% of their revenue to buy back their tokens. So in that sense, revenue becomes earnings. And we see that here, the Magnificent Seven, they have way higher multiples, especially hyper-growth companies like NVIDIA or Tesla have a PE ratio of 55x or almost 300x in the case of Tesla, which is insane. And finally, of course, there are always some challenges and risks involved with every investment, and the same is true for MetaDAO. So main challenges are fierce competition, as we've just seen before. A lot of projects are going after the Launchpad narrative. Then there is the dilution risks. As we know, new meta tokens can always be issued, but there is this backstop. They will only be issued if Futarchy approves it and if it's beneficial for the token, meaning the token price goes up. Furthermore, shallow liquidity. The meta token is still not live on centralized exchanges, but this of course can also be a huge accelerant as more people get access to this investment. Another potential risk factor is Futarchy. As cool as it sounds, it's still young and lots of people have issues wrapping their heads around the concept, myself including. It took me a while to fully grasp it, but yeah, just check out my previous video on it if you wanna learn more about Futarchy. And people might just get tired or fatigued by too much governance proposals. And of course, there's always the adoption risk. I mean, as cool as ownership coins and unruggable ICOs sound, and as powerful as those concepts are, they still have to be proven out in reality. And most of all, investors have to learn to appreciate the benefits of holding those coins, and founders still have to decide to take the ownership token path rather than launching on giant platforms with big distribution like Coinbase, 𝗵𝗁, or Jupiter. And in the end, as with every crypto investment, there is always technical and legal risks. The SEC can come out tomorrow and declare ownership coins as securities, or there can always appear some smart contract bugs and treasury holdings can get drained by attackers. So it's TBD whether MetaDAO will be a profitable investment or not. I personally allocated a small percentage of my portfolio to Meta, but as 𝗪𝗵𝘁 said here, his favorite thing about Futarchy and ownership coins is that it increases the number of investable tokens. So right now he says there are roughly 50 tokens out there that are investable. Like arguably the number is even lower, somewhere between 20 to 30. But yeah, Futarchy and MetaDAO just introduces new tokens that are fundamentally worthwhile an investment. And this is just incredible tech for liquid funds like 𝗬𝗪, but it's also true for liquid retail investors like you and me. And I will leave you with the words of 𝗬𝗪, the co-founder of Solana, which says MetaDAO plays at the intersection of AI and crypto. I mean, this is a very technical post. Please pause that video and read through it by your own. But I've heard 𝗬𝗪 mention MetaDAO over and over again throughout the past few months, and he is super impressed by the team. He likes the concept of Futarchy and the idea of spinning up markets to take decisions. So yeah, I would take a close look at projects that 𝗬𝗪 is somewhat endorsing. And yeah, that's everything for today. I hope you found some value in this video, and yeah, you might have added a new token to your watch list. Please let me know in the comments below whether you think MetaDAO is a good investment and can potentially go to $20 and above, or whether you should steer clear from this investment. And if you would like to get early access to these kind of tokenomic breakdowns or suggest tokens that I should take a closer look at, consider joining us at 𝗬𝗪+, a community of on-chain treasure, passionate DeFi users, and NFT lovers. Alright, that's everything for today. See you in the on-chain trenches. Futarchy.